Hi, welcome to this part of the course. Now we are in front of gold chart, daily chart. Now if you look at this chart, you'll find out that price has been making a downward movement. This is, let me get an arrow marker. You find out that price made a downward movement this way. Now in the process of making this downward movement, you see that price, hold on a bit, let me get a part. Okay, good. Now you see that price came down, made some consolidation here. This is what I was talking about, that price will come back, do some form of consolidation. Then at this point is where you have the torso, where you have this ranging market. Now shortly at this point of torso, there was a deep fall. Now this deep fall is created by influx of orders in the market. This shows the presence of the institutions, or it shows that there is a high volume that has been introduced in the market, and the only people that have this ability to introduce high volume in the market are the institutions. Another time you will have a high volume like this in the market is when there is news outbreak or there's an economic event that just happened. So looking at this, I'm going to take off all this. How do you now determine your demand and supply zone? Now for this particular trade, all this area is called a demand and supply zone. All these points, let me use a rectangle to mark it. All this area are demand and supply areas. This area that I just marked out, now this ranging market is a demand and supply area, but I like to pin it down to a particular zone, because what you have to note is that we are on a daily time frame. Now each of these candles, if you go down to 1 hour, it represents 24 candles of the 1 hour. So you see a lot more ranging movement on the market like this. So now for this particular, let me delete everything I have. For this particular move, this is the last move to the downside. The sharp move to the downside is what we look for when you want to plot your demand and supply zones. Always look for these rallies to the downside, something like this. Something like this rally to the, it's a good place. Now how do you now plot this zone? I want to use this for an example. Now for an example, you see that we are plotting this candle came all the way down, showing us there is high volume in the market. Now the green candle before the bullish red bearish engulfing candle becomes our demand and supply zone. So I like to plot it from the body of the candle to the wick of the candle. Now this is how you plot it. Now once you have gotten this, bear in mind what I'm talking about is this green candle before the red fall. So you are talking about the last up move before the down move, the last up move before the down move. If it's an upward rally, you're talking about the last down move before the upward move. So when this now becomes a supply zone, if I want to plot my demand zone, this also becomes my demand zone. Now look at how price moves both ways. Now you find out that even as price was dropping and it ranged a bit, it came down. After dropping, it came back to pick orders. Like I told you, once there is an inefficiency in the market, this caused an inefficiency in the market. Now let me use the replay. Let's see what happened at this point. Now this caused an inefficiency in the market. Now because of this inefficiency, price had to come back to fill up this imbalance. This zone is a zone of imbalance. Price had to come back to fill it up before going down. Now let's play and see what happened. So you see that as price came down, it went back to fill up the imbalance that it has just created. So I told you that price will always want to fill up imbalances. It will want to create back equilibrium every time. So with all this move, we kept on doing this until it filled up the whole imbalance it had created before going down. Let's just follow the price chart as it goes. You see it filled up the imbalance and there was a sharp move again. Now this sharp move also have created its own imbalance here. So bear it in mind that at any time in the market, price will come back to this point. So I'm going to pause this at this point because this is important to explain also. Now looking at this is our supply zone. This is our supply zone. Let me use the text. This is a supply zone. Supply zone. Because of this rally, we spotted the last up move before the down move. We used a rectangle to mark it out. Price came back to it. You find out that immediately price came back to it, it came down. So what do you do as a trader? Once you have spotted this move, you want to place your trades around here so that as price is coming back, it picks your trade and start going down. Now we're going to treat entries, criteria for entries properly, but this also forms my criteria for making an entry. So you see what happened? It came back inside this zone. Now if at some point you are able to spot with what we have learned, Fibonacci, support and resistance, if Fibonacci and support and resistance falls around this zone, it makes the move even faster. Now if I check my fib, I am suspecting that this is 50 fib. Very good. You see we have the 0.5 fib around here. So it came back to this zone. This becomes a confluence of technical tools making that zone. That's why you had this sharp move to the downside. Immediately it got into this place, it came down. So what do you do actually as a trader when you have seen this kind of imbalance? You want to place your trades around here and maybe place your stops above, so that once it takes it, you see you would have taken advantage of this massive move. Sorry, let me get an arrow. Where is my arrow? Good. Now you would have taken advantage of this massive move to the downside. This is how to make entries the right way. Now if you were trading support and resistance, for someone trading support and resistance, you would have called, if you are making entries based on support and resistance, you would have called this, you would have been waiting for price to break this zone before you go down, while I that is trading smart money would have made an entry and start making money in the market while you are waiting. Then you try to make an entry here, but I would have made my entry. Sometimes when it comes to this place, it returns back, but I would have gone into this market and come out at this point. Now let's look at the demand zone. Let's look at what happened at the demand zone. There are a couple of other demand zones on this chart. Now see what happened. As price came to the demand zone, it started rallying up again. It started rallying up. It gave an upward rally. Just look at how price rallied up to the upside. See how price rallied up to the, I'll pause it here. Now, so you see how price reacts to both supply and demand zone. So at this point, this is our demand zone. Now I believe you know why we call this our demand zone. We call it our demand zone because there was this downward move before the upward rally. Now bear in mind that you can see these demand and supply zones on any time frame. I'm just using the daily time frame to give you a proper example that is simpler, but your job now is to go into the lower time frames and determine where the supply and demand zones are. Now the example, the criteria for determining a supply or a demand zone is, first you must identify the rallies. Look at this rally, look at this rally. Once you identify the rally, look for the, if it's a rally to the upside, look for the last downward move before the upward move. That is where you plot your demand and supply zone. You can plot it to cover all the red candles. You see, I plotted this one to cover the green candle before the red candle move. Now look at again, just look at again, as this was also a big rally, creating a demand, a supply zone again around here. See what price has done as it came into this. You see that green candle before the red fall, price started falling again. So this is to tell you the importance of demand and supply zone on the chart. So I believe this is simple enough. Your job now is to go to the lower time frames, go to the daily, go to the 4 hours to determine these demand and supply zones. Just look at how price reacts on the demand and supply zone. So I'll see you in the next class. Thank you for attending this one.